don't we jump into the IVOL table? And Eric, if you don't mind bringing that up from this morning's macro deck, and I'll walk through kind of ways that I think about it. Yeah, so the big thing here is really the rate of change, right? So you've got the day over day, the rate of change on a day over day basis, week over week and month over month. So that's going to be the columns. I kind of wish I could point to it, but basically it's going to be, two columns over are yesterday. So those are this morning's eyeballs is kind of to the right there. And how are those tracking, right? So what are those looking like from that perspective? Oh, awesome, Eric. Look at him. He's like this is the beauty of having Mr. Genron as production here. So here we go. So we've got today, for instance, some of the ones that I wrote down would be, and I'm looking up. So IVOL remains. It's basically there are IVOL discounts across the board in U.S. equities. There you can see kind of reds on the board still, but the rate of change on a day over day and a week over week basis, they have in certain spots have kind of increased. Certainly on the U.S. equity side, on the ETF side, right? So that was the big call out for me today. Was if you go back and you look at more of the trending basis, or sort of like the 1 month, right? It's those obviously a month ago everything was premiums. So today you still have discounts, so that means there's complacency in the market, and people aren't paying up for say puts, right, or calls, or really just options in general. But so they're not paying up for kind of they're not paying premium. But interestingly enough, and one of the things that that's certainly stood out to me, and again, I'm just sort of one member of Hedgeye Nation and kind of reviewing this data, but the complacency that's remaining in the mega caps. So Apple's still at minus 22%, Microsoft at minus 27, Amazon at minus 14 were kind of three that I wrote down. Google was also similar on a day over day basis. Those didn't really change, and they I believe they kind of increased on a week over week basis. So that again, that's kind of how I read that table. If you scroll over a little bit to the right, Eric, just so the trailing 12-month Z scores. That's the other kind of component here, right? So if you see sort of a big move from a rate of change standpoint, let's just say, something goes from plus 10% to minus 5% or minus 10%, right? So you got a relatively big move. Where does that minus 10 sit on a trailing 12-month Z score? So the team does a really great job of trying to draw your attention to the ones that kind of are on a Z score basis, sort of, moving into the kind of quote unquote outlier standpoint, right? So right now in the ETF range, nothing really kind of jumps out at me as kind of like really pushing the envelope in terms of, say, complacency or premiums. But if you kind of scroll down that FXB, I think it's FXB, it's kind of hard to see on my screen, but it's a negative 1.7, I believe, from memory from this morning. So that's kind of bright green there, right? And then you also kind of have a bright red, excuse me, and then you have a bright green one a few lines down. So those to me, again, kind of that's where my eye gets drawn to in terms of, okay, I'm seeing these like rated change moves, and then how does that compare on the Z score? So when you get kind of outliers of kind of around 2, right? Somewhere around 2, that's where my attention really gets peaked, right? I'm like, oh, interesting. This is something that, hasn't happened on a trailing 12-month basis, and is something perhaps a bit more unique in this environment. So, so hopefully that, answers it to a very, again, it's relatively, not basic, but sort of just again, these are all just one tool in the toolbox in terms of things that you're looking at to help make your decision in terms of execution and where to go, kind of, touch your portfolio in an incremental manner across the board, leveraging the ETF Pro product on a weekly basis, and the trend risk ranges there to the daily, risk ranges that we get in, from Keith, and that we hopefully are writing down in the notebook.